Hello, good morning, ladies and gentlemen. Happy Friday to you as I welcome you to the last trading session for the week. My name is Sharif Daramola as usual, and I will be your host for the next 30 minutes thereabout as we take a technical dissection of the current pairs that we have been monitoring since the beginning of the week. And in fact, in the last 24 hours, we were able to take some significant profits in some of these pairs. So we shall be looking at how well these pairs have been doing so far. And also, it's important I state here that we are going to be anticipating a major macroeconomic event today, that is the non-farm payroll, which definitely everyone in the market will be looking forward to. And we are beginning to see the reflection of this anticipation on the chart as price action, as price appears to be going through a consolidation phase at this particular point in time. Now, if we look at the previous data, we have a whopping 517,000 job offers. That was for the month of January. And there is this consensus of about 205,000 for the month of February. And this is quite below the previous data anyways, but we are going to be looking forward to see if we are going to be having an expectation beyond what we have right here, or probably below this situation. But with the look of things and considering the strong economic data that we have been receiving from the US economy in the recent times, it's very likely that we might be having beyond expectation at this point. And you all know what following the fallout of the first chairman's testification in front of the US Congress on Tuesday and Wednesday, where he has stated that if the economic data continue to remain strong, there is a very high chance that the necessity of a rate hike is very, very possible. And if this is going to be the case, then what we are going to be seeing next week might likely incite a rate increase in the rate hike. Now, with this situation here, how are we going to be anticipating the non-farm payroll? Though because of the hawkish statement from the Fed chair on Tuesday and Wednesday, we have seen an astronomical rise in the dollar, and following that, we saw how people did some trading take profit activities, which resulted in the dollar dropping to the downside in the last 24 hours. And I'm of the opinion that the dollar might be cheap enough again for another buying. So we might likely be seeing some bullish momentum in that regard. But with that being said, let's dive into the current structure and let's see what is really going on in the market right now. So the first commodity we are going to be looking at this morning is the US oil. And what was our expectation on the US oil, and how has the US oil been so far for this week? Now, let's scale down into the 1 hour time frame, where we always identify trading opportunities. So this is what we had here at the beginning of the week. I would like to zoom it in so that we can see things more clearly and look at what we have here. Okay, so at the beginning of the week, we had the situation here where price action was caught within a flat channel, like I said. And you all know what we look out for whenever we have this kind of structure. Either a breakout of the channel to the upside to buy, or a breakdown of the channel to sell. Though the week started on a bearish note when we saw the breakdown of that support line at the $79 area, we had some selling opportunities triggered as price action moved about 40-55 pips thereabout before we started seeing this bullish momentum. And that led to the breakout of the resistant line here, which triggered our buy stop order, and we had a couple of positions following that breakout. As we saw the breakout of the $80 level, we had another position there with the hopes that price action will continue to go to the upside. And something interesting happened afterward. That was on Tuesday morning. We saw our price action transitioned into a flat channel, which further emphasizes the indecision in that market. And this was as a result of the anticipation of the Fed chairman's perspective to the US economy. And immediately during that, prior to that session, we saw the breakdown of this bullish trend line, which gave us a signal that we might be having a sell position. And like I told you on Tuesday morning, that what we want to be looking out for is a confirmation following the breakdown of that trend line to give us an opportunity to join that decline to the downside. And this was exactly what happened here, as we were able to join the bearish momentum to the downside, which gave us about 250 pips on that one. Then our second position got triggered here right below the $79 level, as we also had another one right there, and that one also closed with about 140 pips thereabout. So prior to the live session on Wednesday, we had the profitable situation running on the USOil, and during the live session on Wednesday, we identified the structure here, where price action was caught within the channel between the $77.80 and the $77.20 area. And this was a further signal that sellers might continue to push the price to the downside, as we saw the breakdown retest of the $77.20. Now, during the live session yesterday, this is where we were during the live session yesterday, and I told you how price action has been consolidating around this area, with the hopes that price action will do some breakout at any point during probably the New York session or the UK session yesterday. And this is what I was able to identify here. I told everyone to secure the current position by moving their stop loss to somewhere right below that structure at the $77.20 area, as we continue to monitor price action. And I told you yesterday that we shall be using this bearish trend line here, which has been guiding bearish momentum since the beginning of the week, as a yardstick for trading activity. And one thing I said is that if price action continues to trade below the trend line, we shall feel comfortable in our sell position. However, if a breakout of the trend line happens, then definitely we want to be anticipating a momentum shift. And before we concluded yesterday, we identified the fact that we have been witnessing some buy pressure around the $76.50 level, which has a high chance of sending price skyrocketing to the upside, hereby breaking out both that bearish trend line. So I shared this on my public platform, I think about 30 minutes before the breakout happened. Let's quickly look at that. So I think I shared that on my public platform there. So we have to take a look at it and see what I'm talking about here. So yesterday is on the 9th. So we are going to be scrolling down to on the 9th of March. So that's the 8th. Okay. All right. So this is where we were prior to the live session yesterday. And after the live session, this was what I was able to identify here. Then I said the appearance of a temporary demand zone somewhere around the $76.40 and the $76.30 area is a signal that we might be having a reversal pattern. And if a breakout of that trend line happened, just like I said during the live session yesterday, we'll have no choice than to start looking out for buying opportunity. Remember, we had secured the current sell position at that point, and then what happened afterward was quite interesting, as we saw our price action broke out of the $76.80 level, which was projected here, triggering our buy stop order, and price action continued to climb to the upside. Then we also had the second position triggered at the breakout of the $77.20 level, and I updated immediately that we want to be securing all our buy position just in case a bearish momentum comes in to take us out of this trade. And you can see what happened later on. We saw our price action took us out of that trade, so we were able to make some small profit on the US oil prior to this bearish momentum that started. So this one here, I missed this opportunity, this bearish opportunity. I missed it because I was thinking probably price action will come back to do some retest of the structure before another wave of bullish momentum will happen. But I was surprised, and well, market happens like that most of the time. So this bearish momentum to the downside, I actually missed it, so I didn't share any updates in that regard. In fact, when I came back to the chart yesterday, I saw our price has broken down the $76 area to the downside. And one thing I stated here during my update when I saw that, I said price action takes out the buy position with a small profit as selling pressure resumes, waiting for structures to mature. And in fact, we waited and waited, but we couldn't see any structure below the $76 area to trigger some opportunities to sell. But if you had been part of that bearish momentum yesterday, well done for being on standby to have caught that move. Kudos to you, as you would have had a whooping over 200 pips thereabout, I guess. Yeah, over 200 pips that one is. So right now, as we head into the New York session today, what is really going to be our plan? What are we going to be expecting in this market? Well, since we already have a breakdown of a significant key level, which is the $76 area here, I'm of the opinion that we might likely see some retest of that structure if we are going to be using the theoretical technical perspective to the structure. And most of the time we don't see that kind of situation happen. So one thing I would like us to do here is to scale up into the daily time frame. Let's see what is really going on from an holistic point of view, after which we shall be coming back into the 1 hour time frame to look out for any trading opportunity for today. And if we don't have any, well, we'll just pass that trade, as we've quite been profitable for this week so far on this US oil, and it's not compulsory that we take any trade. So let's dive into the daily time frame and let's look at what is really going on from an holistic point of view, after which we shall definitely come back to our lower time frame to decide what our next line of action will be. Now, looking at the daily time frame here, let me zoom out so that we can see things clearly. Hold on a second. All right, okay, so this is the daily time frame here. And well, if we look at what has been happening on this chart, which we emphasized at the beginning of the week, it is quite obvious that price action has been bearish on the US oil. In fact, throughout the second half of last year, we saw how price action continued to find lower highs, and to further emphasize the strength of the sellers at this point, we connected a series of lower highs to give us this bearish trend line. Now, if we zoom into this current structure, that is what has been happening here in the last quarter of last year till this moment, you will see that price action has been caught within a consolidation phase just right within the $83 area and the $70 area, which appears to be the lowest point price ever been in the last 1 year. Now, if you look at since the test of the $70 level here, we saw our price action had continued to find higher lows, which gave us that bullish trend line that you can see here. Now, with the situation of things right now, as price action breaks down that important key level at the $76 level, approaching that bullish trend line, at this point, I will be advising us to remain patient to see how price action will be reacting to that trend line to decide what our next line of action will be. And for those who are already in the sell position, as that's happened yesterday, I would advise that you ensure that you secure your current sell position by moving your stop loss accordingly to protect your position against any sudden pullback. Now, with the situation we have here on the daily time frame, like I said, we want to be patient to see how price action will be reacting to this trend line to decide if we are going to be buying or selling the US oil for this week. Sorry, for today rather. And if we start seeing buy pressure resume around this trend line or above the trend line, definitely on our lower time frame, obviously, we might likely be looking out for buying opportunity. But if it so happens that price action breaks down the trend line, then we might be seeing another wave of bearish momentum back into that demand zone, in the next couple of weeks. So these are the things we shall be looking forward to going into the New York session and the UK session today. So what I'm going to be doing right now is to scale back down into the 1 hour time frame. So we shall be focusing on the area around the $74.80 area, as we want to see how price action will be reacting to that level in the next couple of hours. So scaling down into the 1 hour time frame. Hold on a second, let's quickly bring that on. Okay, we set the $74.80, okay, $75 area. So this is the 1 hour time frame, and if we take an holistic view of what is happening on the 1 hour time frame, you could see that since the beginning of this week, price action, though we had it started on a bullish note, but subsequently we started seeing some selling pressure, and with the look of the current structure right now, you will see that price action had continued to find lower lows and lower highs. And in fact, if we take a further technical dissection of this current chart, you will see that we have a descending channel here. So with a descending channel here, as you can see, after connecting the series of lower highs, we have the resistant line of that descending channel, and if we connect the series of lower lows, we have the support line of that descending channel. Now price action appears to be around the support line of that descending channel, and if we zoom in to identify the price of that structure, you will see that it is falling right at a very strong psychological level, which is the $75 level. So for the sake of the our preparation for the UK and New York session today, we want to be identifying that structure by labeling it so that we can have a visual understanding of what we are talking about here. So we label that, we name it the $75 area. And if you look at what has been happening here in the last couple of hours, you will see that price action has been finding buying pressure around this area. So the question now is price going to respect the support line one more time, just like it has been doing so far this week? So are we going to see a situation where price will respect this $75 level to incite another wave of bullish momentum back into the resistance line of that descending channel? So these are the things we are going to be looking at. Or the other scenario that could also happen here is if price action breaks down the $75 level, retest of structure will definitely be welcoming an additional sell position in this current market. So in order to have a better perspective into what is really going on around here, I would want us to scale down to a much more lower time frame, just like the 15 minutes time frame. Let's see if we can identify a reversal pattern there or a trend continuation pattern around that area. Now if we zoom into the 15 minutes time frame, let me bring this back in so that we can see things more clearly here. So we have the $75 level, which happens to be the support line of this structure. And then what we want to be doing is to identify the resistance line. As you can see in the last 4 or 5 hours now, price action has been consolidating, which is more or less a sign that there is an indecision in this market. Probably participants are waiting for a catalyst to drive price movement. And remember, we are looking forward to the NFP today. So we have this level sitting at the $75.35. So let's label that also for the sake of clarity. All right, so place at the top right hand side of the screen. Okay, so this is what we have right now. So let me just zoom in so that we can see. So this is what we are going to be working with as we anticipate the UK and the New York session today. So we have the structure here, we have the $75 level, and we have the $75.35 area. So now with the current structure we have here, what we are going to be doing, you know what we look out for whenever we have this kind of structure. We either wait for a breakout of that resistance level to buy. So a breakout retest of that structure will give us an opportunity to buy. That means price action is unable to test the trend line. So we look out for this, then we join the rally to the upside. Now, if price action continues to the upside, what we want to be doing is, as soon as price gets into the trend line, we move our stop loss accordingly to secure the current buy position. Remember, this is a counter trend opportunity, and if price action gets into the $76 level, we move our stop loss again to secure the current position as we continue to guide that momentum to the upside, based on the fact that this is a counter trend opportunity. However, if we do have a breakdown of the $75 level with certain pressure below that structure on our lower time frame, then definitely we want to be getting ready to add more position to our existing trade. So this is what we shall be looking forward to on the US oil for today. I hope I made myself clear here. And if you have any questions, feel free to drop your inquiries in the comment section. Alright, so I wish we'd be on standby to take advantage of this opportunity when it finally happens. And remember, we are expecting a macroeconomic event today, which is going to bring in some volatility in the market. So let's be on standby to catch these opportunities. Then I'm going to be going on to the next instrument, which is the GBPUSD. So on the GBPUSD, we hit our TP target yesterday on the GBPUSD as price action moved with a bullish momentum into the sell window area, which we identified here yesterday. So let's zoom in and see what is going on here. And let's quickly run through how the week went by, since today is the last trading day of the week. So let us have a psychological understanding of what is really going on in this market so far this week. So at the beginning of the week, this was the situation we have here, where we saw our price action initially was caught within a channel between the 1.20500 level and the 1.20250 area, and the continued selling pressure at the 1.20500 area continue to negate every attempt by the buyers to break out of that structure. Remember that we have been witnessing a bullish momentum prior to price action getting into that structure, as you can see here. And what we saw immediately price got into the 1.20500 level was strong selling pressure around that area. And what we agreed here during the live session on Monday was that we want to see price action break down that bullish trend line, which will be the first time price action will be breaking down that bullish trend line so far, a retest of structure in our lower time frame, after which we want to be having a sell stop order below the 1.20250 level. And this was exactly what happened. Price action moved as expected, so we had a sell stop triggered here. We added another position below the 1.200 level as price action broke down, retest that structure as we continue to ride the move all the way down. Then we also added another position after price action broke down the 1.1900 area here, which was a strong supply zone in the past. And we saw that as soon as price got into the 1.18100 level, we begin to see some buy pressure resume in this market. So far so good this week. We have been profitable as we were able to make over 500 pips on the GBPUSD so far this week. Now things got a little bit interesting during the midweek as we started seeing a consolidation phase around 1.1850 level. I think, okay, hold on a second, it was around this area, 1.18400. So we started seeing the sell pressure here, we saw buy pressure here, so we had a consolidation phase around that area. And what we normally look out for whenever we sight this kind of structure is to seek a breakout or breakdown of that channel for trading opportunities. And we were lucky enough to be part of the buy position here, as we had the buy stop order triggered. We had retest of structure, price broke out of another structure at the 1.1850 level, which I also identified on my TradingView platform. I shared this I think prior to the trigger. Let's quickly look at that. So if you follow me on my TradingView platform, you will be part of these updates. You'll be able to see this update and anticipate your next line of action. So this is where we were as that okay, hold on a sec. Okay, this is where we joined that huge selling momentum that took price all the way to the downside here, as you can see. And as soon as price got into that 1.18100 level, we saw buy pressure resume around that area. And one thing we said on the 8th of March was that we're going to be using that bullish trend line here to guide bullish momentum. So what simply this means is that if price action continues to trade above that bullish trend line and the 1.18400 level, we shall feel comfortable in our buy position. And that was our yardstick. I think Wednesday and Thursday we continue to look out for more buying opportunities above that trend line here. So this is what I identify here. We saw I said the breakout retest of the 1.1850. We saw price action come back to do the retest of that structure, triggering that position, and it was at the 1.191 yesterday during the New York session. We had price action hit my TP target. And remember, during the live session yesterday, I told you that we have a huge zone for the TP target, which was identified using our Fibonacci retracement tool after taking into consideration the previous impulse leg. Remember, we run the retracement tool through the previous impulse leg here, and we aimed at an area between the 50 and the 78.6% of that previous impulse leg, which gave us the sell window that we have here. Now, if you look at what has been happening here in the last 12, 10, 15 hours, you will see that price action is currently trading within the sell window we identified yesterday. And this same area also is supposed to be serving as our TP target zone, which we identified. So I told you that you could have your TP target between the 1.19150 level and the 1.200 area. And if you still have your position running here, well done for being confident enough to still stay in this trade. So I will be advising you to move your stop loss to somewhere right around the 1.19150 area to secure this current position. And I am of the opinion that we might be seeing some selling pressure prior to the NFP coming in around this area. So we want to continue to monitor price action within the zone area. We want to look out for something like a reversal pattern to happen, something like a double top structure probably, where price finds a lower high, which will be giving us a signal that price action may likely be taking a nosedive anytime soon. So a breakdown retest on our lower time frame will definitely welcome a position on this one. And if a further breakdown of the 1.19150 happens, we might be looking out for more opportunities to add more position to our existing trade. Now, with the current structure we have here, for those who are still in this trade, move your stop loss to somewhere around the 1.19150 level to secure this current buy position. As we continue to monitor price action, we want to see how price action will be reacting to the zone. So like I said, what we are looking forward to around this area is a reversal pattern or probably a selling pressure pattern on our lower time frame to be able to join that decline to the downside. And one thing I also want us to take note of is the fact that this is where this new week started. The week started at around this area. I told you earlier where we had a channel around this area, and this channel further expanded into the 1.200 level. As you can see, price action was consolidating between the 1.20500 level and the 1.200 area. And then after the hawkish comment from the Fed chairman, we saw a huge spike in the US dollar as people were betting for a 0.5% rate hike, hence they bringing money invested in the dollar with the hope that they can make some money off the rates that is being projected on the US dollar. Now you can see after the breakdown of the 1.200 level, price action spiraled down to the downside. And if we look at this from a technical standpoint, whenever we have a breakdown of a structure like this, there is always a high chance that price action has a tendency of coming back to do a retest of that structure, setting pressure below that level to incite another wave of bearish momentum to the downside. So I'm still very bearish on this one. So we look forward to our price action will be reacting to the zone during the UK and the New York session. But be rest assured that I will be jumping in the comment section on my TradingView platform to give you an update on what my expectations are. So that is that on the GBPUSD, and congrats to those who are still in the buy position here. Just ensure you move your stop loss accordingly to secure this current position. Then I will be going on to talk about the XAUUSD, which was also a very profitable trade for us so far this week. Remember, we started the week at around the 1,857 level. Let's zoom in so that we can see things more clearly here. So this is how the week started for us on the XAUUSD. So we have a similar situation with what we have on the GBPUSD, as price action initially started the week just around the 1,857 and the 1,850 level, to emphasize that indecision in that market. Then we saw the breakdown of the 1,850, which is a beautiful signal for us to join a sell momentum. Price did a retest of structure, and since then price has been spiraling to the downside ever since. We had opportunities of adding more positions at the breakdown of the 1,845, and we also had another opportunity to add position at the breakdown of the $1,839 level here, which also welcome additional position there. Then we also added another position again as soon as price broke down the $1,820 area. In fact, we had about 5,000 to 6,000 profit on the XAUUSD for that sell position that started on Tuesday following the Fed's hawkish statement. Now, during the live session yesterday, and even before the live session yesterday, we have been buying the XAUUSD. As we can see here, since price action tested the $1,810 level, we started seeing buy pressure resume from that area. And to further emphasize the strength of the buyers here, we saw a higher low as price action was unable to break the previous low. So we have this bullish trend line figured out. Then one thing I shared here during the live session, if you recall vividly, we were already in the buy position here after taking advantage of the breakout of the 1,815, and I told us all that we should be having our stop loss order below the 1,810 area to secure this position, but price didn't even go close to that area at all. Now, we also identified a potential reversal pattern yesterday where we saw the situation here. Price tested the 1,810, price came back into the 1,820. Remember, that is a very significant structure on our daily time frame. Price came back to test the $1,813 level. You can see price was unable to break the previous low, so we already had a reversal pattern unfolding during our live session yesterday. And one thing I told you yesterday is that we want to be having our buy stop order right above the $1,820 level, with the hopes that price action is going to be breaking out of that structure to trigger that position and confirming a valid reversal pattern. And this was exactly what happened yesterday. We saw the breakout of the 1,820, and price action has since then continued to find higher highs. And right now, if you are taking advantage of the 1,820 level, you will currently be running with over 1,500 pips in profit. And if you had been part of the buy position a couple of days ago, you will currently be running with over 2,100 pips in profit. Now, during the later part of the New York session yesterday, I updated this on my TradingView platform, where I identified a structure between the $1,831.50 level and the $1,826 area, where I said due to this channel here, we want to be seeing either a breakout or a breakdown of that channel to give us an opportunity to trade. So for the sake of clarity here, let me quickly show you when I updated this on my TradingView platform. So I always ensure that we have this figure out recorded so that we can be able to use it as a point of reference whenever we are about to make an individual decision. Okay, so yesterday is on the 9th. So on the 9th, let's scroll down to on the 9th, where I explained that we should, okay, so this is when we joined the buy position above the 1,815. That was a couple of days ago, and we explained the importance of that reversal pattern here during the live session yesterday. So potential reversal pattern identified. So we have in a buy stop order above the 1,820, and lucky enough for us, we had the position triggered, and price action since has moved over 1,600 pips in profit at this point. As you can see, price action continue to find higher highs. Now, as soon as price got into that $1,831 level, we saw how price action fell into a consolidation pattern, and immediately we identified the structure. I uploaded this to inform us of getting ready to probably add more position to our existing trade or get ready for a reversal pattern here. So a breakout of the 1,831 will be triggering a buy position, and the breakdown of the $1,826 level will be welcoming a sell position here. And this was exactly what happened. Price action broke out of the 1,831 level, 50-cent area, to trigger that buy position. And since then, price action has been trading just above that level, and with the stop loss of this position sitting somewhere around the $1,826 area, price is not anywhere close to the stop loss yet. Now, looking at what has been happening since the beginning of the week, considering the strong bearish trend line that we identified at the beginning of the week here, you can see price action is still trading along that bearish zone that we identified. Though we have a little breakout of that zone right now, but I'm not sure this is going to hold, because I'm still expecting a bearish momentum in this market. Now, but if the market says otherwise, definitely we have no choice than to listen to the market structure. And if price action breaks out of the $1,839 level, buying pressure above the structure will definitely be welcoming additional position here. But in the meantime, my TP target is sitting at the $1,839 level here. And as you can see, price is almost close to the TP target, as we have about 300 pips to close to the TP target at this point. And for those who have been in this trade since yesterday or since a couple of days ago, remember we joined this buy position here a couple of days ago after the breakout of the 1,815. So if you have been in this position since then, I want you to secure all your buy positions right now by moving your stop loss to somewhere right around the $1,829 level, which is just right below the last entry point of that final position that we have here. So let's see how price action plays out from this current structure. So if a breakout of the $1,839 level happens, we want to be buying. But one thing I would like to state here is that we are not having a buy stop order above the 1,089. The reason why that is we are on a long-term bearish momentum, and I'm of the opinion that we might be seeing some selling pressure coming at this point. So for us to be buying above the 1,839, I want to see price action break out that structure, do a confirmation that buyers are actually strong in this market by giving me some buy pressure here on my lower time frame, then I could join that rally to the upside. If this does not happen, then definitely I'm not looking forward to buying. Now, like I said earlier, I'm anticipating a strong sell move to the downside from this current structure, as price action is currently trading around that bearish trend line. So what I will be looking forward to sell the XAUUSD at this point is to see price action come down to break down the $1,831.50 level, which I've identified here. So I want to see price action drop below the structure. Look out for some selling pressure below this level on my lower time frame, after which I want to be joining that decline to the downside. And in fact, this current structure has a potential of giving us multiple entries here, as we have another structure at the 1,826. If it is broken to the downside, we want to be adding more position to our existing trade. But be rest assured, I will be giving you an update in the comment section on my TradingView platform, right below the XAUUSD publication, on what my next line of action will be if there are any surprises in this market. So that is that on the XAUUSD. If you have questions, feel free to drop your enquiries in the comment section. So the last pair we are going to be looking at today is the USDJPY, and in fact the USDJPY has been static for a while. It has been so choppy that price action continued to trade within a range in the last 18 hours thereabout. So look at what we have here since the beginning of the week on the USDJPY. So we had the situation at the beginning of the week where price action was consolidating between the 136.00 area and the 135.800, and the breakout of both the 13600 and the 136.200 level was the opportunity we were looking forward to buy the USDJPY. So we had a couple of buy position on the USDJPY that was at the beginning of the week, as we saw price action culminate at the 137.800 level, and that gave us about 150 on our first position, 140 on our second position, and about 60. So we had roughly 400 pips thereabout on that first buy position we took advantage of at the beginning of the week. Then right here on Wednesday morning, I told us all here that we might likely be seeing a trend continuation, and in order to guide our trading activity for the New York session that day, I identified this bullish trend line, which we said if price action continues to remain above the bullish trend line and the 137.500 level, we want to feel comfortable in our buy position with the hopes that price action will break out of the structure to welcome additional position. And the contrary to what I said is that if price action breaks down both the bullish trend line and the 135.700 level, this will likely be a signal that there is a momentum shift building up behind the scenes. So we had a sell stop order below the 137.500, and as you can see, price action moved significantly well in our favor. Remember, we had our TP target zone within this area, and price action hits the TP target at the 136.00 level with about 150 pips on that one. So far so good on the USDJPY. We have been quite profitable on this pair. Now remember what I told you here yesterday and on Wednesday as well, that the TP target zone for the sellers here will be serving as also a potential buy zone for the bulls in this market. And I told you that if we start seeing buy pressure above the 136.00 level, we shall be getting ready to buy the USDJPY. And this was what I was able to identify on the 15 minutes time frame. I shared this on my public platform. Immediately I started seeing that bullish momentum around the 136.00 level. Let's quickly run through that so that you can see what I'm talking about. If you had been following me, you would have been part of this understanding. So let's scroll down into yesterday was on the 9th. So let's scroll down till on the 9th, and this was what I was able to identify on the 15th. So as soon as price got into our TP target zone at the 136.00 level, I stated here that if we start seeing buy rejections here or retest, we want to be buying the USJPY. Then I think an hour after, I begin to see some momentum in that regard. So I shared a 15-minute outlook here where I said, with buying pressure observed within the potential demand zone, this is what was identified, and this was a structure here with the 136.450 level serving as a yardstick for buying opportunity, which also shares a beautiful confluence with that bearish trend line. So I was anticipating that price action will break out of both the 136.450 and that trend line to give us a beautiful opportunity to buy. And in fact, it took quite a long time for that to happen. I was thinking that it will happen during the Asian session, so I had a buy stop order above that structure as I went to sleep. And look at, things were still the same. I told you a structural update, then another structural update here. I say stay calm, we are still waiting for trading opportunities with buy stops order above the 136.450 and the buy sell stop order below the 136.00 area. Now we saw what happened here during the early hours of today. Price action triggered our buy position at the 136.450, and since then price action has been trading right above that level. Now let's go back into the live chart and let's quickly look at that simple setup I identified on a neat chart here, on a clean chart. So this is what we identify. So I will scroll down to my 30 minutes time frame. Okay, so this is the 30 minutes time frame right now. So the buy pressure still continues here, and this is the simple setup I have here. Price action has already broken out of that bearish trend line, and this is a sign that the trend line may no longer have that capacity to continue to hold that bearish momentum anymore. So we saw the breakout retest of that trend line. Price action triggered our buy stop order right above the 136.450 level, and right now price action is back into our entry point. Now, one significant thing about this current structure is that if we look at what has been happening since the early hours of today, you will see how the 136.750 has been a selling niche somewhat, rejecting all attempt by the buyers to break out of that structure. And with this kind of situation here, we cannot ignore that sellers could come in from this particular point in time. Considering the fact that it has been bearish in the last 24-48 hours now, there is still a likelihood that sellers could come in, but I'm still leaning towards a bullish momentum as long as price remain above that 136.450 level. Now, another thing I did here is to put another buy stop order above the 136.750 with the hopes that price action will be breaking out of that structure, and if it does that, I will be having a buy position triggered here, followed by buying pressure. Would definitely welcome additional position in this market. So for the USDJPY today, and in anticipation of the NFP, I'm looking forward to a bullish momentum on the USDJPY. However, in as much as we continue to look out for buying opportunity here, we cannot ignore the possibilities of sellers coming in. Remember, in the last 24-48 hours now, price action has been bearish. So we should also take that into consideration and look forward to ways through which we want to be selling if structures permit us. Now, to sell the USDJPY, I don't want to see any other thing than a breakdown of the 136.00 level. So I want to see price action take out all the buy positions here. That is all the buy positions that has happened here in the last 24 hours thereabout. Selling pressure below the structure on my lower time frame will definitely welcome additional position to my sell position here. So in as much we are continuing to looking out for buy opportunity on this one, we should also keep in mind the possibilities of sellers coming in. But remember that I will always join you on my TradingView platform to give you an update on what I think could happen in this market, or if there are any surprises in that regard. Okay, I see someone's comment here. What's the name? Legiono Dele. All right. At the moment, I do not have a Telegram platform, so at the moment I only do updates on my TradingView platform. So if you're on TradingView, you can follow me on Darksherry, spelled DARCSHERRY. So if you can follow me there, then whatever peer you want to be following on a daily basis, you can click on it. There is a flag button there. Just click on the flag button, so whenever I give an update, you will be notified of my updates in real time. So for now, I do not have, but with time I hope I get to include that into my list of media platform. All right, thank you. So on this note, I want to wish us all best of luck today, and I advise you to follow me on my TradingView platform so that you can follow up with me as I dish out my regular updates regarding all the instruments we have been monitoring so far this week. So thank you very much for being around. I really appreciate, and I hope to see you in the comment section as usual, and best of luck today during the New York session today. And remember that the NFP is coming up in 6-7 hours from now, so we want to be securing all our position. I'm of the opinion that we are going to be having a huge massive move. So let's be on standby for this one. Do have a wonderful evening, everyone, and a beautiful weekend to you all. Bye bye.